Hi students, welcome again to Financial Accounting 2, Unit 2 Consignment Accounts. I hope the last two videos understood about basics of consignment. Now also we learn about few basics, journal entries and two problems. So last video, introduction, next video, introduction and journal entries. This video, introduction, journal entries and two problems. Okay students, so in this video I am going to explain about what is consignment, next what are the journal entries in the books of Consignor and Consignee, next two problems with the total stock sold. So the consignment is agreement between consignor and consignee to sell the goods on behalf of consignor. You see, consignor is sending the goods to consignee, consignee is selling the goods. Then coming to the importance of consignment. Number one, with this consignment, consignor will benefit with economies of scale. So that leads to decrease in cost. And with that, with the consignment, consignor will get more profit because middle level people, those are wholesaler, retailer, and retailer 2 will be eliminated. The profit which belongs to all these three people or four levels people will be profitable to the consignor, more profitable, and consignor is unable to reach each and every place. That's why he appointed the agents, and his sales will increase, contacts will increase, and the local people will also get benefited with this consignment. Consignor is a person called as principal. He is a manufacturer. He sends the goods to his agent for sale. He enjoys the right of the ownership of the goods until they are sold by the agent. So ownership is vested with the consignor only. And consignee is an agent. He is the person to or a firm who sells the goods consigned to him against a commission. There are three types of commission are there. One is a simple commission. Another one is daily credit commission. Another one is overriding commission. Simple commission is calculated on total sales, that is cash and credit sales. Daily credit commission is given to collect the credit sales. So sometimes daily credit commission also will be calculated on total sales. Next, overriding commission is given for the goods sold more than the price which set by consignor. So on surplus price, overriding commission is calculated. So there are two types of expenses. One is direct expenses, other one is indirect expenses. Direct expenses which are incurred for receiving the goods, those are paid only once when the goods are received. Carriage, freight, unloading and loading charges. Indirect expenses are the expenses which are repeated in nature. So those are go down rent, shop rent, advertisement, insurance, etc. So this I already explained. You can refer for the previous videos. So there are two types of losses. One is a normal loss, another one is abnormal loss. Normal loss is the loss which is due to nature of the goods and types of goods, which we don't have any control on happening of this loss. Example is loss of coal due to loading and unloading. So dust will be evaporated or the quantity will be reduced. Then abnormal loss is the loss which is fully checked and fully controlled on the person. So this loss can be divided into two. One is loss in transit and loss at consignee place. Loss at transit means and the goods are sending from consignor to consignee. If the accident is happened, that is called as a loss in transit. If the goods are destroyed or fire accident occurs at a consignee go down, that is a loss at a consignee place. This is loss at a consignee place. So just remembering the terms which we used in consignment. One is consignor, the person who is sending the goods for sale to consignee is called as consignor. Consignee is the person who is receiving the goods and selling the goods on behalf of consignor or commission is called as a consignee. The agreement between the two parties for sale of goods is called as consignment and consignment agreement. Pro forma invoice. Look at that. Consignment agreement means it may be either legal or oral with the terms and conditions. Pro forma invoice means when the consignor sends goods to the consignee, he also forwards statement showing details of goods such as quantity, price, etc. That statement is called as a pro forma invoice. So in our terms, it is called as a bill, which is considered of quantity, price, and etc. Then non-recurring expenses. The expenses that are incurred by the consignor to dispatch the goods from his place to the place of consignee are called as non-recurring expenses, and the expenses are added to the cost of the goods. Not only dispatch expenses, sometimes expenses, these non-recurring expenses are paid by consignor also. So recurring expenses, consignee incurs these expenses after the goods reach his place. These are maintenance of goods, such type of expenses. Commission it's a reward for sale. And account sale, it is the statement forwarded by the consignee to consignor showing details of goods sold, amounts received, expenses incurred, commission charge, advance payment, and balance due, and stock in hand, etc. Pro forma invoice is sent by consignor to consignee showing the details of goods, and account sale is sent by a report sent by consignee to consignor about the goods sold, amount received, and expenses incurred, commission charge, advance payment, and balance due, as well as unsold stock. So accounting treatment, there are in that accounting, we have to prepare 3 ledger accounts in consignment in the books of consignor, 2 ledger accounts in the books of consignee. So in the books of consignor, we are preparing consignment account. It is a nominal account. So by preparing this account, we will know or find out profit or loss. It is named with the consignee or the place. For example, Ahmedabad consignment account or Kiran consignment account. Consignment with a Kiran account, like that. So all the expenses of the consignment are debited to this account. In journal entries also, we had 3 journal entries. 2 journal entries. One is the consignment account debtor to cash account, consignment account debit side consignor expenses, and another one is consignment account debtor to consignee account. That is consignee expenses or debited to consignment account. So consignment account is nominal account, and with this account we will find profit or loss, and it is named with either consignee or the place of the consignment, and all the expenses are debited to this account. Next one is consignee account. Consignee is a person, that's why it is personal account, and sales are debited to this account, and advance given by advance consignee expenses commission are credited to this account. So balance of this account shows the amount due from consignor. Amount due to consignor, I think. Balance of this account shows the amount due from consignor. This is the consignee account. It will show balance to consign. And another one is a goods and consignment account. It is a real account. That's in, we are posting the goods. That's why it is real account. So goods and consignment are credited to this account. Goods returned to the consignee are debited to this account. Balance is transferred to trading or purchase account. Then stock on consignment, that is unsold stock account. It will represent the unsold goods. Then consignment stock reserve account. This is a separate one. Whenever the goods are sold more than the cost price, cost plus profit basis, to know the exact profit, difference amount is transferred to reserve account. So in this account is opened to adjust the effect of excess invoice price over the cost price in order to arrive true profit. So next in the books of consignee, two accounts we are preparing, that is consignor's personal account, another one is a commission account. So this is a personal account because it is a consignor account. It is a personal account. A separate consignor account is opened in respect of every consignment, and it is debited with expenses incurred by consignee and advance given to the consignor, credited with the value of goods sold, and the balance is showed from amount due to or due from consignor. That's correct. And commission account, it is a nominal account, credited with commission earned by the consignee. This commission is transferred to profit and loss account. Okay, methods of accounting. There are three methods. One is cost price method, invoice price method, memorandum column method. Okay, and memorandum column method is the new one, which I have not covered in earlier two videos. So this method is mixture of both cost and invoice price. Two columns are made to record the cost price and invoice price of the goods consigned. Then no need to pass any entries for removal of loading and unloading of invoice price and cost price. For these two columns, we will show separate columns, and profit will be shown in the cost column. Profit will be shown in cost column. Okay. Next important one is unsold stock valuation. Unsold stock valuation will be, first we have to calculate total cost of the 100 or 200 units. Later, unsold stock is equal to total cost divided by total number of units into unsold stock. So total cost of the goods will be calculated like this. Cost of the goods sent plus all consignor expenses plus consignee direct expenses. That is land, cartage, loading charges, unloading charges, landing charges, unloading charges. That is the total cost. So total cost divided by total number of units into unsold stock. Suppose 100 units are consigned. First we have to calculate total cost of 100 units. Later, cost divided by 100 into 20 unsold into 20. Okay. So in another method also we can find out cost of only unsold stock and only proportionate of non-recurring expenses incurred by both consignor and consignee. That is equal to cost price of consignment stock. That statement also I explained here. So cost price of unsold stock, proportionate of non-recurring expenses by consignor and consignee. That is equal to unsold stock value. Okay. So journal entries. First journal entry is for sending the goods. Entry is consignment account data to goods and on consignment. Next entry is consignor expenses. Consignment account data to cash account. Next one is advance received from consignee, cash, bank and bills receivable account data to consignee account. For this, we have to pass journal entry in the books of consignee also. So advance is paid to consignor. That's why consignor account is debited. Cash is going out, cash is credited. So entry will be consignor account data to cash, bank or bills payable account. expenses incurred by consignee, consignment account to consignee account, and in the books of consignee, consignor account to cash account. For the sales, consignee account to consignment account, and in the books of consignee, cash, bank, or debtors account to consignor account. And commission, consignment account to consignee account, and in the books of consignee, consignor account to commission account. And if suppose any bad debts are there, consignment account to consignee account, and consignor account to consignment debtors account. So for the profit, consignment to profit and loss account, and there is no way concerned for the consignee. That's why no entry. And the final settlement, cash, bank, bills receivable to consignee, and same entry for as advance payment. Here the balance is payment. So consignor account to cash, bank, or bills payment. So GST account, goods and on consignment account is closing. That amount is transferred to either trading account or purchasing account. If any closing stock is there, stock on consignment account to consignment account. Okay. So only left with the normal and abnormal loss entries. So first problem we will do in our Excel. I'm opening Excel. Problem number 1. First you by hand the entries. Next to know the sequence. Sequence means first goods sent on consignment, next consignor expenses, like that. So when you learn 11 entries, in order. So if you remember the entries, whatever the information required for the entries, you can find from the problem. So first I am reading the problem. Raja Mills Limited of Ahmedabad sent 100 pieces of shirting to fancy stores daily on consignment basis. So here two parties are there. Those are Raja Mills Limited is sending the goods. So goods are sending by Raja Mills Limited. That's why Raja Mills Limited is consignor. To whom they are sending? Fancy stores. So fancy stores is consignee. I marked the names Raja Mills Limited as consignor and fancy stores as consignee. And the consignee are entitled to receive 5% commission plus expenses. Cost to Raja Mills Limited is 600 per piece. How many pieces are sent? 100 pieces. Each piece how much? 600. So total amount of goods sent on consignment is 100 into 600. Goods sent on consignment is 60,000. Next to consignor expenses. Consignor name is Raja Mills Limited. There were no information about Raja Mills Limited paid some amount. Next to fancy stores Delhi pay the following expenses. Fancy stores Delhi is consignee. Okay. Consignee expenses are 1,000 plus 1,500, 2,500. 2,500. So entry for consignee expenses is consignment account to consignee account. Consignee name is Fancy Dresses. Account amount is 2,500. So in the books of consignee also we have to write name of the consignee is Raja Mills Limited. Consignee name is Fancy Stores. Here, consignor name Raja Mills Limited. So everything is already known to me. That's why I prepared. When you by hearted the entry, you can also write like this. 2,500. 2,500. Expenses of sales. Right. Next one is sales. We'll see in the problem. Raja Mills Limited draw on the consignee a draft after 30,000. That is a advance received. So bills receivable account data. Account data to Fancy Stores Limited. Amount is 30,000 advance. As already we know from the previous chapter, for Raja Mills Limited it is bills receivable. For Fancy Stores it is bills payable. Raja Mills Limited account data. So how you will remember these entries? Then you can easily understand this. So better to write down the entries as many times as. So advance paid 30,000. Right. It is discounted for 28,650. So we have to pass one more general entry for discounting the bill. Right. Bank account data. Discount account data. To bills receivable account. So bill amount is 30,000. And it is 28,650. Discount amount is 28,650. Discount amount is 1350. B by R discounted. This entry we know very well from the previous chapter. B by R discounted. Right. So here is happening. So bill is discounted. No entry in the books of consignment. Next, later Fancy Stores Delhi reported that the entire consignment has been sold for 78,000. Now it is sales. Sales journal entry in the books of consignor is consignee account data to consignment account. Consignee name, fancy stores account data. Fancy stores account data. To consignment account, amount is 78,000. So these are received in the form of cash. So cash account data to Raja Mills Limited. Amount is 78,000. These are the sales goods sold by consignee. Next to commission. Commission is 5% on sales. Consignment account data to consignee account. Consignee name is Fancy Stores Limited. Fancy Stores. So we have to calculate commission. That is 78,000 into 0.05%. 0.05, that's all. Okay. Amount is 3,900. Right. So for this entry, consignor account data to commission account. Raja Mills Limited account data. To commission account, 3,900. Commission due or paid. Okay. So there is no unsold stock here. And profit or loss we will calculate now. Now first one, we are posting the entries. This blue part, okay? Blue part in the books of consignor. In consignor, what are the accounts we have to open? Consignor accounts, what are the accounts we have to open? Okay, see that. Consignment account, consignee account, goods and consignment account. Okay. So consignment account we are going to open. Yes, consignment account opened. We are entering here. Then consignee name is Fancy Stores Limited account. Next to goods and consignment account. Yes, it is 3 accounts. So what is the first entry? Can you remember? Consignment account data to goods and consignment account. Consignment account debit side to goods and consignment. Just a shortcut I'm writing because of space. Amount is 60,000. Okay. So in this GSC account also we opened. GSC account is credit. So we will post in GSC account by consignment account. Amount is 60,000. Right. Second entry, consignment account data to bank account. No amount. Just simply we will post, okay? Bank account, no, 0. Just for remembrance purpose. Next, advance receivable. Bills receivable account data to fancy stores account. Fancy stores is consignee. Consignee account credit side by bills receivable. By bills receivable account. By bills receivable account. Amount is 30,000. Right. So we don't have bills receivable account. That's why need not to worry. Discount also not to be posted any 3 accounts. So in this any 3 accounts are not represented. Next to sales, consignment account data to consignee expenses. Consignment account data to fancy stores account. So in fancy stores account, that is by consignment account. And it is 2,500. And in consignment account debit side, amount is 2,500. Next to sales, I think. Fancy stores account data to consignment account. Fancy stores account debit side to consignment account. Amount is 78,000. In same manner, consignment account is showing credit here. So we'll move to consignment account credit side. And we will record in the name of consignee. His name is Fancy Stores. Amount is 78,000. Right. Then one more. Next entry is commission. Consignment account data to Fancy Stores account. Consignment account data. First consignment debit is there. That's why to Fancy Stores account. Amount is 3,900. And in Fancy Stores account, by consignment. Amount is 3,900. Okay. Right. Over, I think. Entries with the amounts are over. There is no unsold stock. Now we have to calculate profit. So first we will close the first account, that is consignment account. Here it is 78,000 is credit total and the debit total is 66,400. Minus this is equal to 11,600. 11,600 if I posted, it will also become 78,000. Okay, so this is profit to P&L account. That already I posted entry in the books of consignor. Entry is consignment account data to profit and loss account. Consignment account to profit and loss is there. So that's why I would write consignment account data to profit and loss account 11,400. Right. And now we have to close the consignee account to know the balance. using Excel, that's all. Okay, nothing is there. So here the total is 78,000. 78,000 minus direct ledger, 78,000 minus 36,400. Amount is 41,600. If I posted 41,600, here also it will become 70. Yes, by bank account. So credit side bank is there na, by bank. That's why it is debit. Bank account data to fancy stores account. So it is the balance amount received from consignee. I already marked entry. Cash, bank, bills receivable account data to fancy store account. Why I kept empty here? So in the problem, consignee name, problem to problem, consignee name will be different. To easy marking the consignee name, just I kept vacant or empty. Okay. So amount is 39. Bank account data. Amount is how much? 41,600. And 600. In same manner, amount is paid to Raja Mills Limited by fancy stores in their books. Raja Mills. Amount is 41,600. Now final account is goods and consignment in the books of consignment. So simply transfer to trading account. That is 60,000. So total is 60,000. Just now we finished journal entries and ledger accounts in the books of consignor. That is this part, okay? Goods and consignment account data to trading account or purchase account. So I mentioned trading account, I will also change here. You can write purchase also. Right. Now this part is over. Now we have to see the entries for green part. That is journal entries in the books of consignee. Consignee name is Fancy Stores Limited. First journal entry, there is no journal entry for goods received, no journal entry for consignor expenses, and there is advance paid to Raja Mills Limited. We prepare consignor account. That is Raja Mills Limited account. Advance paid, that is to bank account, to bills payable account. Amount is 30,000. Right, next to consignee expenses. Right, advance. Next, consignee expenses. Entry is Raja Mills Limited account data to bank account. To bank account. Amount is 2,500. Next entry is goods sold. Raja Mills Limited account data to cash account data to Raja Mills Limited account. Raja Mills credit side by cash or by bank. It's for sales. Okay, for understanding purpose I am keeping. bracket. Amount is 78,000. So Raja Mills Limited account letter to commission account. To commission account. Amount is 3,900. And in the commission also, we have account by Raja Mills Limited. Amount is 3,900. Right? So next balance was paid to Raja Mills Limited to bank account. Amount is 41,600. So it will balance 278,000. There is no due amount, okay? And this commission is transferred to profit and loss account, P&L account. Amount is 3,900. We pass entry, last entry. Here we will pass commission account tab. To P&L account. Commission transfer to P&L account. So that's all entries, okay? So from the problem number 1, we prepared journal entries in the books of Consignor and Consignee, and we prepare ledger accounts in the books of Consignor and Consignee, okay? So very simple. And you have also knowledge at intermediate level. You can do fast. People, those who are not having intermediate knowledge like mathematics and just go through the journal entries. Write down the journal entries 3 or 4 times. So whenever you are writing the journal entries, you will write narration. Narration is a reason you will find the solution or the information from the problem to that reason. Okay, students, we'll check. Okay, right. In this, there is one more second problem is there. That problem you try at your home. You can note down the problem. This is the second one. Ram and Co. Calcutta Consigned. Okay. Take a screenshot and try at your level best. Okay, bye.